Hello, chart watchers and Decision Point faithful. Welcome to this March 14th Decision Point show with Carl Swenlin, my father, and myself, Erin Swenlin from DecisionPoint.com. We're here to get you all prepared for the week and show you the charts that we think are the most important. So, Dad, how's everything going?
Pretty good. Got some extras for today.
Yes, it's going to be an interesting start today because we're going to start with what I'm calling it Carl's grab bag. You have a lot of things you wanted to share, but listing them all out didn't make sense. So we're just going to do the grab bag. Carl will be looking at the market and our indicators as well. I'm going to pick up after that with a sector overview. We'll look at rotation. We'll look at currently what those sectors are doing. It's been all over the place as far as rotation. So where is the strength? I have pinned down a couple of industry groups that I very much like right now. A few of them we saw in the free trading room this morning. And then I will give you a diamond of the week. We'll see if we can suss out maybe more than one, but we'll check that out when we're doing our strength. And I'll find that those stocks that look worth a second look here as a diamond of the week. All right, so let's go ahead and get this started. Before we do, I mentioned my free trading room that I do Mondays at noon Eastern. Great way to spend your lunch hour is with me in the free live trading room. I take symbol requests. We go over what's going on in the market. Very popular. If you haven't signed up, it's very easy to do so. You'll see the ad for the Decision Point live trading room on our homepage. Just go ahead and click on that, and that'll get you registered. It also will put you on our free newsletter. And if you don't want to be in the trading room, no big deal. Just go ahead and sign up for that free newsletter. All right, our Decision Point sector scoreboard really is rather messy here. We do see that energy has a buy in the intermediate term and the long term. So this tells you that the 20-day EMA is above the 50-day EMA. It's on a silver cross. That's a silver cross buy signal. Here we have golden crosses and death crosses. When you see the buy signal in the long-term trend model, that means that that 50-day EMA is above the 200-day EMA. Other than that, utilities have buys. You know, we've lost it. Long-term trend model signals on consumer discretionary. Comm services has been on a long-term trend model sell signal for months and months. Other than that, there really aren't too many changes to note here. Any comments from you, Dad, on the?
No, I'll be covering technology later.
Awesome. All right, well then, without further ado, let's go look at some of those charts. I'm going to let you take control of the screen and go for it.
First of all, I wanted to talk about options expiration this week. It's end of quarter option expiration, and we'll expect Thursday and Friday, we'll expect lower volatility and high volume on Friday. Here's the last end of quarter option expiration. You can see that S&P 500 total volume was spiked up really high there, and that's usually the case. And the other quarters, we don't see that kind of volume increase. I'm not sure why. I think maybe just so many of the contracts are rolling over at the end of the quarter. But the reason we bring it up, or reason I bring it up, is that when you see that volume spike, don't attribute it to something else, like maybe people are really piling into the market or bailing out. It generally has nothing to do with that, although there could be some extra volume in there associated with it, some other action, but mainly it's just options expiration causing that spike. Okay, did pick up. John Malden is calling a recession. He says we're in a recession, and I'm sure there's a lot of people that agree with him. I do. just to follow up, we talked about that last week. There's I wanted to make a point that there's really no one size fits all approach to the market. That's why we don't generally don't make recommendations because it's different for everybody. One of the things that longer term that people don't normally think about long term anymore, but is that you want to be able to buy high quality, high dividend stocks when they're low. And here's an example of why. If somebody had bought Chevron in this area about 18 back in 2003, at that time it was it had a yield of 7%. Now that's the cost base is $18 a share. Now over here we've got dividend of $5.44, which happens to be 30% of that cost.
From
30% a year. So you can see now that's 20 years. There are people out there who have plenty of time to try to find that kind of an opportunity. And actually, I think we'll probably have that kind of an opportunity coming up within 2 years, I'd say. So that's something to keep in mind. It doesn't always work for everybody, but to me, having your portfolio in that kind of quality and with the dividends pouring out, notice we have the dividends panel here, and in this particular stock is one of those that it just keeps going higher, the dividend. Okay, tech stocks. We've got. Wait a minute. Let me go over the tech stocks. We follow the FANG Plus, we call them. And actually, it's if you go by the name changes, it's now MANA, M-A-A-N-A.
Yes, manna from heaven, maybe.
Right? Could be. Okay, Apple. This is not a support line per se. I mean, it might end up being, but this Apple is down 18% from its high, and it's in a bear. It's close to going into a bear market. It's just that simple. And so, at this point, I wouldn't expect this support to hold. There's really nothing else associated with it except this congestion here.
Yeah, that was actually a question in the trading room: was how far down do we think Apple could go here? So what are your thoughts? I pulled up a weekly chart because I just didn't think that it was, I thought that the daily chart, while it was helpful, I think the weekly chart was
We can look at a
bit better for that.
Yeah. I would say look for 50% down. I don't, whatever that is. That would be just a wag.
Mm-hmm.
Just it's 50% there, right about here.
Mm-hmm.
So maybe it's more like here. More
Yeah.
like here. So 40, 50%. That's what, I can be totally wrong on that, of course, but at this
yeah,
point,
I mean, I see some support maybe at 140.
Oh yeah.
But, still, it seems more likely to me the 110, 120 level, possibly 100, just looking at the support levels there. But yes, that was a question. Well, how far down could it go? And I was like, a lot further.
If it goes back to a PE of 10, which is not really typical for tech stocks, but if it goes back that with an EPS of 6, that means about 60. So
yeah.
that's that. I don't know if that's going to happen, but we're not looking good at this point in terms of the market in general,
Mm-hmm.
economy. Adobe, it's in a bear market now. Amazon is in a bear market. Meta Platforms, it's the bear market. MasterCard, bear market. Microsoft, bear market. Netflix, and it just keeps, this is not necessarily a support line here. It's
No.
Apple. It's just to line up 53% decline. NVIDIA, again, we had a double bottom here. It bounced, and this is going to break down. I mean, that would be my prediction.
Mm-hmm.
That's the obvious thing that's going to happen there. Tesla bear market, DISA bear market. So did I say, Chip, any that weren't? Oh yeah, Apple's not in the bear market yet.
Yeah, technically.
Very close to being there. Looking at the XLK, it is in a bear market, just barely at this point. Note the 50 is converging on the 200 EMA, and that's
could see a death
have a
cross.
crossover fairly soon, within probably a week or two. One of the things I wanted to show in here, let me show the table. Of all the sectors, consumer discretionary is the worst. The next worst is technology. And that means only 11% of these technologies sector, S&P sector, are on Silver Cross, 20 above the 50. 46% are on a Golden Cross, which is, that's fair market. I'm sorry.
Yeah.
So going back to this chart, if we look at
under the hood there.
Yeah, stocks above the 200 EMA, there's 17%. That, and there's only 10% stocks above the 50. At any rate, that means the Golden Cross is heading for this number, 17. Golden Cross right now is at 44, but with this many stocks in the dumpster, this is going to move towards that. Now, this could change tomorrow and everything turns up, but the way everything's trending right now, we could expect that the Golden Cross index is going to get much worse than this. Okay, let's get on to our indicators. Today, we notice we're still within this triangle here. Tried to penetrate, but did not quite make it. Volume was higher than the average. This is the first chart I will look at in the day because it's the most short term.
Mm-hmm.
And right now, we do not have climax indications. We have high volume, but that's used to confirm other indicators here. We have the S&P down up volume ratio is less than we say. We're not looking, since it's a down day, we're not looking for up volume indicators. So everything, we're basically no climax today.
Yeah. We look for readings on those volume ratios above 3.0 typically.
Right.
Mm-hmm.
Wrong chart.
Doesn't look good there.
It has this New York, that's not to change, so it's not updated yet. And here we advanced decline volume, that's decline line. It's trending downward, confirming what we see on the price. New high, new low. It looks like it's expanding today. If the price gets below this low and this doesn't expand downward below this low, we'd have a
positive divergence, hopefully.
Positive divergence, yeah.
By that time, though, I don't know.
Silver Cross index for the big three here. Small cap actually ticked up today. Interesting. The mid cap ticks down, and so did the large cap. Gold still struggling. Notice we got a departure from this rising trend line, got pretty severe, and it's coming back to that trend line. We're looking at this support line as being, as being the most important aspect rather than the rising trend. So we would look for this support to hold. So hopefully we've got here and here and possibly here now. The dollar index, it's you know, at 52, near 52-week highs, and that's not helping gold at all. Well, yes, I wanted to show everyone the 10-year. Remember, we had all this crashing here, but now it's at well, at 1-year highs at least. It's whatever caused this pullback is not important anymore, and it's moving higher with a vengeance. Oil, just like gold, it's got way ahead of itself and pulling back. It's dropped below this line of support. Not good. This is the next line showing up here.
Yeah, it ran up so quickly, but you know, the fundamentals still seem to tell us that we should expect it.
It's weird.
Yeah.
It's just like we knew the 10-year yield was going to be higher, even though it was pulling back, and we knew it was going to, and the same thing with oil. I don't see any way that it's not going to be moving higher, but right now somebody's playing around. And the bonds, his 20-year bond, it's not looking good. So we're expecting bonds to go lower, yields to go up. Maybe a quick look at Bitcoin. Here's the what they call, air quotes, store of value.
Right.
So it's chugging along in a sideways range here. And I think I have covered everything that I wanted to cover. Is there anything that you had any questions?
No, I think you covered it really well. I'm looking at Bitcoin staying in that range as well. It just doesn't, I don't see any breakouts coming in here. We'll see.
Right. And as people stop buying it, where does it go?
Right. Exactly. Tulip mania, as you said, tulip mania without the tulip bulbs.
Right.
All right. Let me go ahead and share my screen. All right, let's go ahead and take a look at sector rotation here. I can show you this, but I think what will really be helpful is looking at that sector RRG. So I want to take it to a daily, and it gives us the very, very short-term sector rotation, what's strong right now. And as you can see, we talked a lot about technology, Carl did, and you can see XLY also lagging and traveling in that bearish southwest direction. XLF looks like it wants to have some improvement here, but so far not quite there yet. And XLC had been traveling toward leading. It was actually starting to look good, and then it completely reversed and is now heading back to lagging. So where is the strength? Currently, XLU, XLRE, healthcare, industrials have some pretty good areas to look at. And of course, XLB, which has now moved into leading from weakening. On the bigger picture, though, and let me get that updated. There we go. XLE is still clearly the biggest outperformer. So I want to go here and zoom in just to see what's going on in the intermediate term amongst the rest of them. So utilities still looking good. healthcare still looking good, and materials still looking good in terms of sitting and leading, and then also having that bullish northeast heading. So those are the things we're looking for as far as what sectors to, fish from, if you will. So at this point, I'm liking utilities, healthcare, energy is of course still on my list. XLB has some areas of strength, but overall, let's go ahead and look at the industry summary, because this is what's really going to tell us where the strength is. And I picked out a few. So we're going to skip comm services. We know that that's an area we don't want. Discretionary, we're going to not look there. And staples, while they look okay, remember the ones we're really going to want to focus on are utilities, healthcare, energy, of course, still looks good. It's just we're getting that pullback right now. But let's concentrate on healthcare, utilities, and industrials, because that's where I'm seeing a lot of the momentum happening. So healthcare, you'd be really surprised though. Healthcare had a great day. We're seeing healthcare moving in the proper direction on the RRG, but you'll notice that most of these industry groups aren't looking that healthy. Most of them have PMOs that are turning down, but there are exceptions. Medical supplies, no. Biotechs, we were starting to see some action there, and now that PMO is trying to top, and you can see that price is still holding beneath the 20. But where is some strength? Healthcare providers are still looking okay. And pharmaceuticals really is the place to be in healthcare. If you're going to be in healthcare, it's very clear when you look at this industry summary, PMO rising, breakout above 20 and 50-day EMAs. Yes, getting ready to hit a little bit of overhead resistance here, but that sure looks double bottomish to me. So if you're going to be in a group, pharma looks really good right now. If you go industrials, let's see, I already did this for us beforehand, but we can make a move through here. So we're looking for PMOs that are rising. We're looking for price action, not like this. Airlines making a little bit of a rebound, but you can see that momentum still hasn't quite shifted. And you've got aerospace not looking that great. We were expecting it to do well with the war. Building materials, no. Defense looked good. It was very much like what we're seeing in oil and gold. Really big push, pulling back to the 20-day EMA. But I think that this area of the market still looks somewhat interesting. It's just we're getting quite the pullback. This was one of the areas I liked. It's holding above the 20-day. This is the industrial suppliers, and below the 50-day. I think that that looks pretty healthy right now. The rest, commercial vehicles, we're looking at something good, but it's just basically in a trading range. Heavy construction looking good on the breakout, pulled back to the breakout point today. Nice double bottom setting up here. That might be a good area to look for your stocks, heavy construction. Diversified industrials, the price action isn't doing it for me. We may see that the PMO is about to give us a crossover buy, but that price action is nothing interesting. Business support services, the PMO has been rising, but again, you're just not getting the proper price action to go along with it. And not a fan of marine transport right now. Waste and disposal looking all right. We're getting that bounce off of the 50. Railroads look okay, but they tend to be slow movers, literally and figuratively, I guess. Truckers starting to see some damage on their chart. And transportation services also a problem. So really, when it comes to industrials, there's three areas: industrial suppliers, commercial vehicles, and heavy construction. Those are the areas that I like in that sector. And next up, we're going to look at utilities. Utilities have been pretty obvious as far as some of the areas to invest in here. Gas distribution did break out. It's pulled back to that breakout point, and so far is holding above the 20. The PMO is looking kind of toppy here, but ultimately it's still rising, and you can see stochastics turning back up, suggesting there's still some internal strength in there. Multi-utilities was one that I mentioned to subscribers we might want to watch this week. Breakout, holding above that breakout point. really nice PMO action. Stochastics oscillating above 80, which tells us there is internal strength. Conventional electricity still looking pretty good, not as good as multi-utilities, and water, probably the one area in utilities that I would probably avoid at this point. So what does that leave us? Well, I really like the pharma group, right? So let me go ahead. We're going to run one of my scans very quickly. This scan is available online. These others are not, but my diamond scans are. And hopefully we'll get some pharmas in here. Yeah, we did get one. So INVA, that looks like a pretty nice looking chart here. Again, pharma looking good. So this is the kind of chart you're going to want to find. The only thing I have to say I don't like here is it just hit overhead resistance and formed a filled black candlestick. So those are generally not a good thing, those filled black candles, but it's not a very big one. So I think you're still looking pretty good on a V bottom here for that one. I know that Mary Ellen last week had talked about Pfizer, and you can see Pfizer's just really making a nice breakout. Plenty of upside potential here on this one. If it can get back up even to this area of overhead resistance, that's about a 9% gain. If it can recapture those highs this year, that would be 17% gain. So I like the setup on that one. Moderna was actually another one that was interesting. It's been very beat down. So you have to be really careful with this one just because that 50 is so far beneath the 200. We're seeing some action here that is good. We've gotten above the 20 now for the first time since back in December. So there is some possibility here, but we just want to be careful. The group is doing well, but look at what Moderna is doing against the group itself. It's doing about as well as the group, but more importantly, it's doing about as well as the S&P. If we were in a bull market, I'd say that's great. But if you're in a bear market, you want to see your stock outperforming the S&P because otherwise it's just going down slower. All right, so those were, I had one more that came up in the trading room. It's a very similar look to Moderna. And again, you have the indicators are shaping up here, but we are, with both of those, they had big days up. And so you're going to have to expect a little bit of backfill there. So let me just go back to, I have half a minute left. And I'm going to run this one more time. I just wanted to see if there's anything else that looks particularly interesting in here. All right, lots of banks. So that's an interesting situation here. But other than that, materials, containers, and packaging. That looks like a good one here. Nice breakout happening. Still at overhead resistance, but looking really positive right now. Stochastics are above 80. That's giving you internal strength. And then again, here's your outperformance of the S&P, which is critical right now. All right, that's all we have for you today on the Decision Point Show. We appreciate your patronage and come check us out in that free trading room and check the rest of our videos out. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.